Accounting Standard 12, Accounting for Government Grants. So we will be studying the recognition principles for government grants. So obviously we need to first understand the exact meaning of government grants. We know that for many purposes government offers assistance to various business entities. For example, government gives subsidy which may be straightaway certain percentage of the project cost for setting up the business in backward areas. So, and the purpose is obviously the industrial development of that area. Similarly, for various socio-economic purposes, government gives various types of grants, subsidies, drawbacks. And we are obviously going to consider the recognition principles of these grants. The question that needs to be addressed is, what is government? And again, this has also been defined in AS 12 as to what is government. Very simply stated, government means either central government or state government or local body government like municipal corporations, cantonment boards, etc. Sometimes there are government bodies or government agencies. For example, Western Maharashtra Development Corporation is not a government in itself, however it is a government body or government agency. So if a grant is received from such development corporations, etc., it is also a government grant. And sometimes even some international bodies give grants or subsidies, like there is USAID, or for example sometimes World Bank gives funding to certain projects in the form of grants. All these are governments: central government, state government, local body, government agencies, even international bodies. All these are called as government for this purpose. Government grants are assistance by government in cash or kind to an enterprise for past or future compliance with certain conditions. Now understand this. This is either in cash or in kind. So there may be a straightway financial cash assistance provided by the government, or sometimes government provides you assets free of cost or assets at concessional rate. This is in kind government grants. And obviously there are certain conditions attached to the grant. For example, if the grant is given for purpose of setting up an industry in backward area, then the very first condition normally would be to set up that industrial undertaking, to make it functional. There would be some other conditions, like that entity continues for a certain designated period and it produces certain amount of quantity. So there such various types of conditions may be attached to the grant. So it is subject to the compliance of these conditions, past or future. So these are all government grants, subsidies, drawbacks, etc. However, there are certain exclusions. Now we are aware that government provides various types of tax exemptions, tax holidays, for example. These are not government grants. These are not dealt with by AS 12. So tax exemptions are not government grants. Similarly, government participation in the ownership of the enterprise. So you take any public sector undertakings, there is a government shareholding, government contributes in the equity share capital of these PSUs. Their contribution of that in the equity share capital of that entity is not government grant. And normal trading transactions with the government also are excluded from the scope of AS 12. So government, there are various government entities which deal in certain products and services they may sell or buy, and if your entity is involved in such transactions, then those are normal trading transactions and those are excluded from the scope of AS 12. Now moving ahead, we are going to see at what point of time we recognize government grant. Our perception may be You recognize it on receipt. Whenever you receive the grant, you recognize that. How we recognize, we are going to see later. Whether we are going to recognize that as income or in any other way we are going to recognize, we shall see later. But right now we are seeing that what point of time we recognize this. So there are two conditions which are important before we recognize a government grant. Condition number one is reasonable assurance that the enterprise will comply with the conditions attached, and two is collectability. So there is a reasonable certainty that ultimate collection will happen. These are the two conditions. First one is reasonable assurance that whatever there are conditions which are given for the government grants, there is a reasonable assurance that the entity will comply with those conditions. Second is collectability. There is reasonable certainty that the grant will be ultimately collected. So the point is, mere receipt of a grant is not a conclusive evidence that conditions attached to it have been fulfilled. So for example, grant has actually been received. So collectability is out of question. It is actually been received. However, there is no reasonable assurance that whatever conditions which are required will not be fulfilled. That will be fulfilled. There is no reasonable assurance that those conditions will be fulfilled. In that case, you cannot recognize that as grant. You may recognize that as receipt in advance. However, unless it meets the recognition criteria, you cannot recognize it as grant. What are various types of grants dealt with by AS 12? To simplify, I have segregated it into 5 types: compensatory grants, non-monetary grants, grants related to specific fixed assets, grants related to revenue, and grants of the nature of promoters' contribution. To simplify, we will see accounting treatment recognition of all these grants one by one. First, let us see compensatory grant. What happens is, sometimes the grant is awarded to provide immediate financial support to the entity. Maybe for the reason of there being abnormal loss to the entity caused by natural calamities, or maybe for some other reason, this financial assistance is provided which is compensatory in nature. The purpose is to compensate for the losses. What is a treatment? Treatment is very easy. This should be recognized in the statement of profit and loss in the period in which it becomes receivable. So you recognize in the profit and loss account as an extraordinary item if appropriate. So if suppose the compensatory grant is on account of a loss which is extraordinary item as per AS 5, then this grant is also recognized as extraordinary item if appropriate. Not in all cases it is an extraordinary item, but in most of the cases it could be an extraordinary item. That is compensatory grants. Now we shall next see non-monetary grant. What can happen is, there are two possibilities. Government provides you asset free of cost for the purpose of maybe setting up industry, for the purpose of setting up plant, etc. Land is given, for example, free of cost, or machinery is given free of cost. Or sometimes government may give you these assets not free of cost but at concessional rates. For example, land, the fair market value of which may be 10 crores, and government offers that land, rather it gives that land to you for only 1 crore. Now this is non-monetary grant, and this is different from grant for specific asset. Please understand the difference between the two. Case 1, government gives you land for 1 CR, the fair market value of which might be 10 CR. This is non-monetary grant. Case 2, you acquire land of 10 CR and government gives you 9 CR as subsidy or grant. This is a grant for specific asset, which we shall discuss later. Right now we are discussing non-monetary grants. So how you account for a non-monetary grant? Extremely easy. Extremely easy. When the asset is given to you at concessional rate, we account for that asset at acquisition cost. In other words, in simple words, we can say that we do not recognize grant at all. How? Case 1. Land given to you by the government for 1 CR. You paid 1 CR to the government, but the land value might be 10 CR. This is obviously non-monetary grant. Concessional rate पे आपको दिया है, लेकिन I do not recognize this 9 CR separately as a grant. Rather, I record asset at 1 CR. This is a straightforward treatment. I hope you understood. And case 2 is very easy. If it is given free of cost, free में दे दिया आपको land, then what we do is we recognize, we account for the asset at nominal value. The purpose is to signify or to indicate the existence of the land. If you do not recognize that free में ही मिला है आपको, you have not paid anything for that, there is no cash outflow, so you can say that just let's not recognize it. What will happen is the existence of the land will not be indicated at all. So to indicate the very existence of the land, even though it is given to you free of cost, we show that land at nominal value. What is nominal value? Maybe 10 rupees, maybe 1 rupee, 100 rupee, you show that. You account for that, and that is not going to make any difference to the financial statement because it is a very insignificant immaterial amount. So in fixed asset register or wherever we disclose it, we will disclose it at say rupee 1 or rupees 10 or rupees 100. So far we have discussed compensatory grant and non-monetary grant. Now more important, grant for specific asset. Now understand this. Government case 2, जैसे मैंने बताया आपको, you acquire the asset. There is a scheme of the government where the government is giving you subsidy or grant. You apply to the government that I am fulfilling all these conditions and please give me subsidy or grant, and government then gives you subsidy. This is grant for specific fixed assets, or to acquire specific fixed asset, government gives you subsidy or grant. Now how to recognize this grant, and which may be for any asset, which may be for land, for acquisition of land, which may be for acquisition of plant and machinery, which may be for acquisition of building. So how to account for that? There are two ways of accounting. There are two methods of accounting grant for specific fixed assets. Let us understand these two methods. Method 1. Let us first see method 1. What is done is, this grant is shown as a deduction from the gross value of the asset, and also we are going to see one illustration on this, but understand this. For example, if the asset, the gross value is 100 crores, suppose you receive grant of 50 crores, then what we are going to do? We are going to deduct this 50 crores from the value of that fixed asset. So first entry that will be passed for 100 crores is fixed asset account debit to bank 100 crores, and then when you receive this subsidy or grant, what you will do is bank account debit to fixed assets 50 crores. So now your fixed asset will be 100 crores minus 50 crores, so that would be 50 crores. Where the grant equals whole of the cost, asset is shown at nominal value, similar to non-monetary. In this case 100 crores का asset है और पूरा 100 crores सब्सिडी मिला आपको, तो आप क्या करोगे? You will deduct it. If you deduct the entire thing, that will be 0, 100 minus 100, but let it be, you will record that at nominal amount, say 10 rupees, 100 rupees, you will show that for purpose of signifying its existence. Now, what is the impact on profit and loss account? If it's a depreciable asset, what is its impact on profit and loss account? If it's non-depreciable asset, anyway it doesn't have any impact. You have recognized asset itself at value after deducting grant. But if it's depreciable asset, what will happen is, since your carrying amount is reduced by the amount of grant, what will happen is subsequently your depreciation charge over the years will also reduce. So automatically this grant ultimately gets recognized in the profit and loss account by way of reduced depreciation charge. So method 1, is it clear to you? Method 1, how? We will deduct the grant from the gross value of the asset. If grant covers almost the all cost of the entire cost of the asset, we will record the asset at nominal value and it is recognized in the profit and loss account by way of reduced depreciation charge in case of depreciable asset. Now there is another method also. There is another method, and in this method number 2, now we shall see method number 2. If the grant relates to specific fixed assets which is depreciable fixed assets, then the grant which you receive is treated as deferred income. So what we are going to do, understand this. Suppose you acquire asset for 100 crores, same entry, fixed asset account debit to bank. You receive grant, let's say 50 crores. What will be an accounting entry? In this case method 2, bank account debit 50 crores to deferred income account or deferred grant account 50 crores. Now this deferred income or deferred grant account will be a credit balance and it will be shown on the liability side. However, what is going to further, what we are going to do is, we are going to depreciate that 100 crores on a systematic basis, and as we depreciate year on year that 100 crores, we also transfer from this deferred grant account proportionately amount to the profit and loss account. So for example, 10 crores is a depreciation charge, 5 crores will be the income which will be transferred from deferred grant to profit and loss account, which will be recognized as income. So ultimately the charge to the P&L would be 5. So effect on profit in method 1 and method 2 is similar, only the way it happens is different. The grant may also relate to non-depreciable asset, for example land. Since there is no question of depreciation charge in future, there is no question of income that gets credited also in future. So what we do is, we straightway take this grant to capital reserve, which will not get subsequently transferred to profit and loss account. We will simply transfer. So the entry we will make for that grant, in this case non-depreciable asset, would be bank account debit to capital reserve account. There is sometimes a possibility that grant relates to a non-depreciable asset, however it requires fulfillment of certain obligations. There are certain obligations or certain expenses which are required to be incurred. In that case, the grant is credited to income over the same period over which the cost of meeting the obligation is charged to income. देखो, जैसे डेप्रिसिएबल असेट में आपने क्या किया था, डेप्रिसिएशन P&L को डेबिट हुआ था और ग्रांट प्रोपोर्शनेटली आप क्रेडिट कर रहे थे. सो यू वेर न्यूट्रलाइजिंग द इफेक्ट ऑफ ग्रांट over profit and loss account. Similarly, if there are obligations to be met, then over the period over which these obligations are to be met for non-depreciable asset, I will recognize, so I'll treat that as a deferred income, and that also will get transferred to P&L account as and how the obligations are met. So understand this method 2 very clearly. Grant, if it relates to depreciable fixed asset, in method 2, we do not reduce from the carrying amount of the fixed asset, rather we credit that to deferred income account. And as we charge depreciation, we credit profit and loss account by way of reversal of this deferred income. If it's non-depreciable asset, we credit it to capital reserve. And if it's a non-depreciable asset with obligations, then we again treat that as deferred income and we transfer to profit and loss account on the basis of what is the cost of meeting such obligation. On that basis we transfer. We are going to see one illustration on this also, relating to grant for specific fixed assets. So far we have covered compensatory grants, non-monetary grants, and grants relating to specific fixed assets. Now we shall be discussing grants related to revenue. What are these? I'll give you example. For example, suppose there is a fertilizer subsidy or a urea subsidy. So what happens is, these fertilizers are controlled by the Department of Fertilizers, which comes under Ministry of Agriculture, and they ensure that the farmers get these fertilizers at reasonable rates. So they subsidize these products, and what they do is, suppose cost of manufacturing a fertilizer bag, suppose 10 kg is 100 rupees hypothetically, but government wants that farmer should get it at rupees 80. Then the difference of rupees 20 means normal selling price would be 100, which covers cost plus profit, but government wants it to be sold at rupees 80. The difference of rupees 20 will be given by the government to the fertilizer manufacturer as a grant. So what happens is, the fertilizer company is not at a loss, and the farmers also get these fertilizers at reasonable rates as the government wants it. So in this case, this is called as revenue subsidy, grants related to revenue. How we recognize them? Or for example, let's take another example. Suppose power subsidy is there. In particular industry, the power cost is very high, which makes that operations of the industry not feasible. And suppose that is the case, if it is not feasible, then government gives power subsidy. So for example, per unit electricity normal bill is 8 rupees for example. Government say that we will give you 3 rupees per unit as a subsidy. This is power subsidy. How we account for these? Very easy. They are either recognized as income or under other income, or if they relate to particular cost, they are deducted from the cost. They are treated like a revenue item. Simple. Moving ahead, grants in the nature of promoters' contribution. What is this promoters' contribution? They are given with reference to the total investment in an undertaking or by way of contribution towards its total capital outlay. For example, Central Investment Subsidy Scheme, CISS, and no repayment is ordinarily expected in respect thereof. Understand? Very easy. जैसे कि मैंने पहले बोला आपको, the very first example, to set up, for example, let's say to set up a factory in northeast region, because it's a backward, industrially it is a backward area. So government is promoting the setting up of factories there to promote industrialization, to create job opportunities, etc. Government says that you set up a project there, we will give 40% of the project cost as subsidy by way of promoters contribution. So they say 40% हम लोग दे देंगे subsidy के in the form of subsidy. Now this does not relate to specific asset, it relates to the entire project, and this is a promoter's contribution, not in the nature of subscribing to the equity share capital. That is different. That is not a grant. This is purely money given to you without any much conditions attached to it except setting up of the project. It's very easy. This would be treated as capital reserve. This would be credited to capital reserve. So we have seen the treatment of compensatory grants, non-monetary grants, grants related to specific assets, grants in the nature of revenue, and grants in the nature of promoters' contribution. Now, what if the government grants had to be refunded? Suppose it might happen sometimes that you recognize a grant, but later on certain conditions are not fulfilled and you need to refund that grant to the government. That might also happen, though in rare circumstances, that you do not fulfill the conditions. So you have to refund that grant to the government. How you will deal with this? How you will treat this? Treatment of refund is extremely easy. The treatment would depend on how initially you recognize the grant. For example, what are the possibilities? There is a possibility that there is some deferred income and the credit balance remains and you refund. What you will do? you will first debit to the deferred income account, and if the balance, if any, remains, you will debit to the cost of the asset, means you will add that to the asset if the grant related to specific fixed asset. If the grant which was earlier recognized was credited to capital reserve account is now being refunded, you will debit capital reserve account. So treatment is very straightforward, one by one. If its unamortized deferred credit remains and if it relates to the revenue, then first apply against that credit and excess would be charged to profit and loss account. If it is related to specific asset which was originally reduced from cost, then increase, add to the cost, increase the book value of the asset and depreciation to be charged prospectively. इसका हम illustration देखेंगे. If it relates to the specific asset and originally it was credited to capital reserve, reduce from capital reserve. If it originally related to specific assets and credited to deferred income, reduce from deferred income means you will debit the deferred income account, and excess you will add to the asset value, increase the book value. And if it was in the nature of the promoter's contribution, obviously it was credited to capital reserve account, now we will reverse that capital reserve, we will debit it to capital reserve account. Friends, now we will take up one illustration. Now see this, year 1, cost of the asset acquired is 100, let's say crores or lakhs, 100 lakhs. Grant received is 40 lakhs. So obviously 60 lakh is the value. Suppose you applied method 1, there are two methods. Method 1 is applied, for example. So I will reduce the book value to 60. Suppose the residual value is 10 and estimated useful life is 5 years. On straight line basis, how we will depreciate this? Very easy. 60 is a depreciable amount now because it's a carrying amount. 60 is a carrying amount, I'm sorry, and 10 is a residual value. So 50 is a depreciable amount. And this will be depreciated over 5 years, means 10 lakh would be charged as a depreciation every year. So what will happen is year 1, 60, 10 depreciation, carrying amount 50. Year 2, 50 is opening balance, 10 would be the depreciation and carrying amount would be 40, net block would be 40. Now suppose in year 3, unfortunately, grant needed to be partially refunded, say 15 lakh was required to be refunded to the government because of not fulfilling certain conditions. What will be the fate of this asset and this refund amount? Now what will you do? See this, at the end of the year 2, your carrying amount is 40, you can see this, 15 is refunded. Since earlier when grant was received, I reduced it from the book value, now refund I will debit to the carrying amount of the asset. So what will happen is, see this, now your carrying amount becomes 40 plus 15, so it becomes 55. Suppose residual value is the same, it is 10. Now what will happen is 2 years have elapsed, so 3 years have remained. Useful life of 3 years is there from now, and the depreciable amount is 55 minus 10, that is 45. So how much is the depreciation every year? 45 divided by 3, because now the remaining useful life is 3 years, that is 15. So I will depreciate 15 for 3 years and ultimately my asset value would get reduced to the residual value, which is 10. Friends, thank you for patient listening. Best of luck for the exams. For more videos and update, please subscribe my YouTube channel.